difficult. Many of the uranium pricing services are actually paid services. So sure. Well, it's a sector that was in a very long, deep, protracted bear market for a long time, and it really did not have the intention of many investor segments. What we've seen in the last 12 months, I would say, are a renewal of interest across a number of different investor segments. And I would say that based on all the investors I've talked to over the last few months, it's still in the very early stages of interest. You said on an interview recently that one of your guests said that he thought the easy money was made, and I had a chuckle about that because I know the early investors in uranium would probably tell you the exact opposite. It was the hardest money to make because they were there in 2018 and 2019 when no one else was there. And it took a long time for their thesis to play out. And I think that thesis really started about a year ago in terms of showing some green shoots. And then the arrival of the Sprott Physical Uranium Trust, I think, helped act as a catalyst to ignite further interest in the market over the past 3 or 4 months.
Yeah, and looking forward to the rest of 2021, maybe you can give us some insight on what you think the Sprott buying will look like. I know that's really tied to investor interest, but what do you see going forward there?
Sure. Well, as I said, when we announced the acquisition of Uranium Participation Corp back at the end of April, it was a small number of different hedge funds that were, I'm going to call, early stage contrarian investors that were involved in uranium, not just the physical, but also the equities. But in the last few months, what we've seen is a broadening of interest. More generalist investors, retail investors right across the board. And I would say the interest has not just been North American centric, it's been global. We just finished a multi-day roadshow, a virtual roadshow, and we had calls basically from morning till night because we were talking to different investors in Europe, and then we would toggle over to North America and then finish with Asia at night. So there's a lot of interest in the category, and as I said, I think it's a function of the uranium market finally coming back to life after a very long bear market. And I think it's realization across a number of commodities that the energy transition is not going to be bump free. And we're seeing that right now in a few markets. Yes, the price of uranium is up 40 or 50% in the last few months, but it's not just uranium that's had this pop. Natural gas prices have tripled in Europe. We're seeing coal prices around the world spike. So it's not just uranium that's catching a little bit of this bid right now. The transition away from fossil fuels, as I said, is not going to be bump free, and we're clearly hitting a few bumps in the road right now as things like renewable forms of energy, which are always going to receive lots of support, have some weaknesses. And one of the primary weaknesses is around intermittency. So when the wind is not blowing as much as the models say it will, and you have to fire up natural gas plants, and there's a supply squeeze, the price can triple. And I think we're seeing a number of different energy markets respond accordingly in the last few months.
Right. And speaking about where the interest in uranium is coming from, I was watching your presentation at the recent Red Cloud event, and you mentioned that there are people looking at this sector who normally wouldn't be looking at commodities at all, really. So maybe you could talk a little bit about that. I found that really interesting and how it connects to these other things that you've been mentioning.
Sure. Well, I think the world has really moved away from value investing and contrarian investing for a very long time, because with a backdrop of very cheap and easy monetary policy, growth and momentum investing has really been the flavor of the day. And that's happened for many years now. So being a contrarian investor is not an easy thing to do. And investing in uranium and uranium equities over the past few years has been a very strong contrarian decision for many investors. So now as markets start to recover and more investors discover what the fundamentals of a market are and what the supply demand dynamics look like for a commodity, I think you get people starting to poke around in the sector again. And I would say that based on the discussions I've had over the last couple of months in particular, we've spoken to a number of different institutions that said to us, we were invested in uranium in the last cycle. And when I say last cycle, I'm talking about, close to 15 years ago. And it was very easy to ignore since then, but it's starting to get our interest again. And we're starting to do research and diligence on the Sprott Physical Uranium Trust. And that to me is a really good sign. It doesn't mean they're all going to come rushing back in, but the uranium market is not a very big market compared to, say, the oil and gas market and other commodity markets. So it doesn't take a lot of capital to come from the generalist pool of capital to make kind of a ripple in the uranium market.
Right. And so now we have some idea of why people are getting more interested in the uranium story. Maybe we can talk more specifically about the attention that the Sprott Physical Uranium Trust is getting, which is quite a lot of attention. Do you think that's due to the fact that it's a vehicle that's taking supply off the market? Is it to do with, it's taking some of the opaqueness out of this industry? Mm-hmm. What are you seeing there?
Sure. Well, I'll go back a couple steps to our acquisition of Uranium Participation Corp. And, Sprott as a company manages about $14 billion US in these commodity stockpiling funds or trusts. So we have a long history of managing them. We have a lot of experience managing them. And over the years, you accumulate 250,000 clients and you gain a lot of knowledge around what commodity investors are interested in. And so I think we've taken a lot of that know-how and experience and we put it into the re-engineering of UPC into the new Sprott Physical Uranium Trust. So we did a number of things that we thought were going to be very well received by investors. And I'll just give you a few examples. So first of all, we added a US dollar purchase option. And you might say, well, why is that relevant? This is a fund listed on the TSX. And that's correct. But the reality is there's a large capital pool of investors in the US, and many of the investors in the Sprott Physical Uranium Trust are actually based in the US. So that just was something to give them the opportunity to invest in their home currency. We added a daily net asset value. So every night at around 7 p.m. Eastern, we actually publish what the net asset value of the trust is. We show the pounds of uranium that it holds. We show the market value, the cash position in the fund. And that transparency, I think, brings a lot to what you said, a very opaque market. As an investor, how do you even get the price of uranium on a screen or just to go to any search engine or financial website? And the answer is it's very difficult. Many of the uranium pricing services are actually paid services. So you need to subscribe to get a price of uranium. So I think the trust acts as a really good proxy for what the spot uranium market is doing every day. That transparency, I think, helps the fund trade more efficiently in terms of its net asset value, market value, gives investors the confidence to understand and the knowledge to understand exactly what does the trust hold every day, what's it doing, and that transparency we've received great feedback on. Prior, the predecessor vehicle will provide this information once a month. So we think this is a huge step improvement. What it also allows us to do is operate something called an at-the-market offering, or ATM for short. And this allows us to issue new units accretively to the trust when it's trading at a premium to the prior day net asset value. So this mechanism allows us to, allows investors to, if they're interested in investing in physical uranium, they can buy units of the trust on the market. And there's a chance that the units that they're buying are actually a newly minted primary share versus a secondary share. So instead of buying shares from an existing investor, you may be buying a share unbeknownst to you from one of our underwriters. And those underwriters basically send the net proceeds to the trust, and then the trust acquires more physical uranium. So we implemented this at the market offering on August 17th. And within a couple of weeks, it started to pick up as people understood how it worked. And we've issued about 700 million US dollars since that time in new units. So the trust, when we acquired it, was about 630 million US dollars in value. And now we're about 1.6 billion. So the interest has been tremendous. And what we've done with all that capital is obviously bought more uranium. So when we acquired the assets of UPC, there was approximately 18 million pounds of U3O8 or yellow cake. And that stockpile now is well through 34 million pounds. I think that's 34.5 million. So We've bought a lot of material in the spot market. That's helped to provide price discovery in the spot market, activity and liquidity, which market participants universally will tell you was kind of lacking for a long time. So all of this activity by the trust, I think, is giving the marketplace a lot more confidence and information about price formation in the uranium market.